Welcome to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, as well as joined by Adam Freund, CRC of Main Financial Group. To our viewers at home, we have a very important show for you today and something that affects every investor from one time in life to another. In fact, sometimes during the same week even. Market volatility, the ups and the downs of the stock market. And we know you're watching the news and you're asking yourself, how do I brace myself? What's coming next? How do I prepare for all of this up and down like a roller coaster? Well, today's show is all about market volatility and some strategies that you can implement to stay safe while we're going through some turbulent times from now and again. Jordan, how are you today?
I am great. I'm excited for this topic, so appropriate for what's going on lately. How are you today, Cynthia?
Fantastic, Jordan. Thank you for asking. And Adam, how are you?
Well, I'm living proof that you can survive on coffee and spite.
Well, there you go. And a little bit of golf and maybe your beautiful wife, Robin, mixed in as well.
That's right. We actually have Robin in the studio today. So hi, honey. She can't hear us, or she probably can hear
She's
us.
watching, always
She's
watching.
She's always watching.
Well, she's amazing. It's an honor to have her. And I know Emily is also in the area, which is great. So what a blessing. So talking about market volatility, gentlemen, obviously it affects all of us from one time to another. I mean, never is the market completely one way, never flat. It's always up and down.
Correct.
So Adam, I think to start us out, you might have a story for us, if I'm not mistaken, about some wild horses and a rancher?
That's correct. Well, let's pretend that you're the rancher, okay? And you see 10 wild horses out there and you think to yourself, you know what? I want to get those 10 horses into my stable. So you build a nice outdoor stable with a one-way gate, gate that you can open and close, and you put some food in there and you wait. And the first night you notice that one of the horses comes in, okay? And it starts eating the food. And then the next day, another horse comes in and another horse. And now you've got 9 horses in this stable, but that 10th one is still sitting out there. And you're, gosh darn it, I want that 10th horse. What am I going to do? You put more food out there. The next thing you do, you wake up the next morning. Now there's only 8 horses in your stable and 2 wild horses back out there. And God darn it. Well, this is no good. I'm going to put another, more food out there. You wait another day. Now there's 8 and then 7 and then 6 and then 5. For gosh sakes, close the gate. Close the gate. And I think that's a lesson for everybody out there is you need to know when to say when. And when you're dealing with an unstable market like we're dealing with, like we deal with, I don't know, all the time, really, you can't let emotions and, darn it, I just wanted it to be $1 more. If it was just $1 more, for goodness sakes, take your winnings, right?
Absolutely. But before we jump into that, we forgot to mention on last week's show, our exciting new announcement that we have 3 additional offices in Metro Detroit.
That is amazing. And I'm so excited for you. So talk about the different locations, because that is actually big news that we want to share.
Yep. As of now, we have Livonia, Northville, which is right on the 275 corridor.
Yep.
We have Bloomfield Hills.
Yep. Square Lake and Woodward.
Yep. And then we have Troy, which is essentially I-75 and 16 Mile, Big Beaver. Yep. So going from 1 office in Brighton to 4 around Metro Detroit is an exciting announcement. It shows how rapidly our firm is growing. And we wouldn't be able to do it without this great show and all your support over the last year.
Oh, well, it's an honor to be with your team. I absolutely adore you both. And on the viewers at home, my gosh, the show has been doing so well. It's because of you. I mean, truly it is. So I'm honored to be your host, but really the magic comes from the 2 of you. Truly.
Yep. Yay.
So yay, I know. Speaking of yay, which is emotional, Adam, your story actually talked a lot about sometimes emotional reactions.
Yep.
So specifically with the stock market, let's talk a little bit about having an emotional reaction, how that can be dangerous for people in the retirement years.
Yeah, I think part of the issue is that people get very emotional one way or another. They get euphoric when the market is up and they get really depressed when the market is down. And the problem is, really, the most of the time is we know that people don't follow a plan or they don't have a plan. And not having a plan is I always say it's a plan to fail, but you
Yeah,
can
I say, a goal without a plan is just a wish.
A
That's
wish.
right.
You know, I mean, you can look at this past year in the month of April of 2025 as a prime example of this, right? We had at the beginning of that particular month an announcement on a tariff, global tariff war, if you will,
Yep.
and all of the indexes dropped, some of them as much as 10 or 12% in 1 month, right? But then by month end, almost all of them have come back, and some of them were positive for the month. What a roller coaster in that 130-day window.
Absolutely.
We had so many discussions of essentially talking clients off the cliff
ledge. Yeah.
to say, hey, you do not want to sell when things are low. People tend to do that. Volatility, things are down. Oh, let's sell, let's go to cash. Well, you just sold low. Then when things are good, as he said, everyone's excited, let's buy. Well, now you're doing the opposite. You're buying high and you're selling low.
Yes.
So market volatility is always going to be in the picture, and a good written financial plan will be prepared for that volatility. And it's more evident more now than ever recently.
Well, I also think knowing your risk tolerance and abiding to that, meaning that if you can tolerate about, let's say, a certain number of points going down or going up, you got to kind of stick to that plan too. And knowing your risk tolerance, we actually have a good website for risk tolerance. It is mfgrisktest.com. That's mfgrisktest.com. And you can kind of get an idea of, what is it, 11 questions?
Yeah, 11 question, quick little multiple choice survey, and it will give you a score of 1 to 100. And people ask us all the time, well, what does that score mean? What if I'm a 62? And we use the great analogy of driving a car. So, and miles per hour, that's your miles per hour. How fast are you comfortable driving your portfolio? So clearly someone that's an 85, boy, they're a racer. They want to be on the highway in the left lane going fast. So their investments should mirror that. On the flip side, if someone's only a 20, they don't even want to go on the main drag. They want to stay in residential streets. Their investment should be more conservative. So it's a two-part thing. First, going to the website and determining what your score is, but then mirroring it up to what your investments really are. Are they driving the speed that you want? And 9 times out of 10, it's not.
They're not. You're right.
That's true. That's true. And it's so imperative to know your risk tolerance, especially when you're in the retirement years, because the one thing that you don't have, correct me if I'm wrong, is time to make up the losses, because losses hurt more than gains help.
Well,
Correct?
think about it. Whenever you lose, you need to make more the next year to get back to where you were. An easy example, you have $100, you lose 30%. What is that? You have $70 left.
Right.
And so that very next year, if you have $70 and you earn 30%, are you back to 100?
Yes.
No, you're only at 91 because you have less principal. So the idea is in retirement, we have to make sure we're fully understanding what risk we're taking on the downside, because we need that much more to get back on the upside.
And just a little piggyback off of that, if you score a higher risk, let's say you are a 65, you are probably more tolerant to market fluctuations. You're not going to make a maneuver during that period of time. In fact, we have people that call when the market was down, should we start buying more? Right?
Yeah.
And
Well, and that's why,
was higher.
exactly, it's so important to have a plan that accounts for that,
Correct.
right? A good written financial plan brings everything together to factor in risk and all of your investment portfolio.
Makes perfect sense. Well, Jordan, talk to us about getting ripped. What is that today?
Well, that's a good a transition into this. So our offer today for everyone watching the show, come in for 2 meetings to get your own customized personal, what we call RIP report, right? And the R stands for risk. We just talked about risk in this segment. Make sure you're driving the right speed that you want for your portfolio. The I is, we're going to talk about in the segments to come, is income. Do you have an income plan or an income guess? And more importantly, what is the most amount of income your portfolio can generate? We can show you how to be more efficient and maybe use some tools you don't have to generate more income. The P is overall portfolio health. Put that portfolio on a treadmill. Make sure you're not paying too much in fees, and make sure your sectors are allocated correctly. And then the T is my favorite part, Uncle Sam, taxation. How do we get Uncle Sam out of your pocketbook? And like we said, we've got 4 locations now around Metro Detroit, 2 meetings out of your life. The first meeting to come in and tell us what you like and don't like about your portfolio. And the second meeting is to get your customized report that's going to tackle all 4 of these sections.
Jordan, thank you so much. Adam, thank you so much to our viewers at home. This is your opportunity to get ripped. That the number to call is 888-462-7839. 888-462-7839. Don't forget the website to visit if you're curious about your risk tolerance. mfgrisktest.com is the website that you will want to visit. Click on the QR code. That'll take you right to the landing page, of course, for Main Financial Group, and you can schedule your time accordingly with Jordan and the team. We're going to take a very short commercial break. We talked about some mistakes that people make during volatile times, but what about some safe strategies? We'll dive into that when we return.
I was an accountant by trade out of school, out of Michigan State, and I absolutely hated brokers, financial advisors, whatever they wanted to call themselves. I was a tax accountant, and we would share a mutual client, and this broker would advise our mutual client to buy, sell, and never do any tax strategy, and I was left to clean up the mess. So I went to the client and said, please talk to your broker and tell them to knock this off or begin to do some strategy, and the typical broker response was, I'm not licensed to do that. I can't talk about taxes. So I basically decided to get my investment securities license and all my other licenses out of spite so that we could do all the tax planning as part of the investment strategy for our clients. The value of choice, as we always say, if you go to a big box firm, they're going to have one of 6 portfolios, let's say, and you're going to fit into one of those. The value of working with an independent advisor, especially a fiduciary like we are, is that they have to do what's in your best interest, and they can use any program that's licensed out there in America. So a huge difference. After 20 plus years on this side of the fence, I think our industry does a poor job at explaining to the public the difference of those two. I come from a culture of helping people and educating them, not just telling them what to do. So I think people that truly want to educate make a big difference in this industry.
Welcome back to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main and Adam Freund of Main Financial Group, and we're talking all about market volatility and what you can do to stay safe when that storm hits. We talked about some mistakes that people make in the first segment. Now this segment, we're going to talk about some safe solutions, if you will, some guidance to give you peace of mind. Gentlemen, such an important topic because obviously, as we know, you turn on the news every single day and it's something a little different. No one knows what to expect, what's coming. But it's interesting because people can be smarter, if you will, by not reacting emotionally, but neutralizing what they're feeling and then also utilizing some of the tips that you talk about. What about Roth conversions? Should we talk about that?
Oh,
that's a great one.
I like that one.
Ultimately, Roth conversions, for those that don't understand it, is taking an IRA, your pre-tax retirement account, which is all income tax to you, and converting it to a Roth IRA account, which is all tax-free. In 2010, they changed that law that anyone could do that. Now, there are some nuances with it, and you pay tax at the time you convert, but once it's in that Roth IRA, it never is taxed again.
Wow.
And I think it's important to understand the 3 types of tax buckets, right?
Yes,
that we always
absolutely.
go over. We have that we just talked about, our IRAs, which are all pre-tax, and how are they taxed when we pull money out?
Oh, capital gains.
No, Adam. That's
Never
all
gonna get this right.
100% ordinary income tax to you. The next category down is your after-tax investments, also called non-qualified.
Right.
And how are those taxed? I think you're right. The capital gains. You're going to be right eventually.
Eventually.
And that's what you just pay the tax on the growth you made. Then the last bucket is what we're talking about, tax-free Roth IRAs, which we don't pay any tax on.
We are not taxed
So
on
the
those.
idea is, how do we get money from the bucket 1 down to bucket 3? Those are the Roth conversions. So your point, Cynthia, now with the market being suppressed a bit, is maybe a better time to say, let's convert that taxable money that's a lower amount into a Roth when the market rebounds. Now that's all tax-free growth. So if someone has $500,000 in a retirement account and it's down 20%, it's down to 400. We can convert that, only pay tax on the 400, and now all that growth coming back is tax-free.
Wow.
We like tax-free.
Wait a minute, do we have a tool?
We have a calculator online. I wonder if the control room can put it up on the screen.
Yeah, this is great. It's a free calculator, a tool, as we call it, anyone can use. It's a separate website, maintaxbill.com, and you can go in and run as many as you want, but it will show you if you hold your IRA till 95, or do you convert now, how much you'll pay in tax. It's a great calculator. You put a few pieces of information in, your age, how much you have in retirement accounts, what you think your tax bracket will be, and the rate of return that you want. And it takes a very complex subject into simple terms. So even those of you that have advisors out there, you can use this tool with them. I know that's generous of us, but that's how we
How much
operate.
does this cost, Jordan?
0 or free? What?
Free. Oh, we can't say that. 0.
Oh,
Zero.
yeah.
There's no
Complimentary.
cost involved.
Yeah, there you go.
Complimentary. And it's maintaxbill.com.
Yes.
Why wouldn't anyone visit that today? That's pretty amazing.
Agreed.
Well, and that was the number one thing that we get when we get people to come to us. We say, well, our current advisor doesn't talk about Roth conversions or not allowed to talk about Roth conversions. They're a big broker, if you will.
Right.
I don't want to pick on any big brokerage house.
Right,
But
right.
think about it. If they have $100 million under management and they say, and it's all retirement accounts, let's convert those dollars to Roth IRAs. They're going to lose 20 or 30% of the taxes that have to be paid.
Yep.
So the big firms don't want their advisors talking about Roth conversions. And a lot of them don't have tax certifications like we do. On the flip side, if you go to a CPA only, they don't have time to do future planning. They're pretty much doing tax returns, which is looking in the past. So we came up with this tool to say, this is a huge need in our community. And it's a very complex topic that I think we brought to more simple terms.
Yeah, and the report is written in plain English. You can read, I mean, it's actually in very large print. So it's easy for old guys like me. We can read it pretty easily.
I love that. Well, you don't need any help. What do you mean? Well, another thing that people talk about is the importance of being diversified in a volatile
yes.
market. And a lot of people think they're diversified, but they don't really understand what that means. So can we talk about that a little bit and also maybe rebalancing a portfolio?
Absolutely. We actually had a gentleman come to one of our events that we used to have that he went up to Jordan and he said, I am the most diversified person you're ever going to meet.
Not person, investor.
Investor.
Yes.
The most diversified investor you're ever going to meet. So you said,
well, let's take a look at all of the mutual funds. He was all in mutual funds, and we sent it over to Morningstar in Chicago, which is like the J.D. Powers of investing.
Yep.
And they dissect these mutual funds to see what the underlying stocks that mutual fund is buying. When we got the report back, 65 of his 72 funds that he owned were buying the same 25 stocks, essentially. So it's called stock overlap or stock intersection. So he thought he was diversified, but as an example, he was buying Apple stock in 65 different funds, and he had no idea.
No.
So it's so important to truly understand diversification, not just think, well, I bought a bunch of different funds, and so now I'm diversified.
yeah, and not that we're getting a little bit too into the weeds, but when we also took a look at where his sectors were, he was over 50% in the technology sector.
Right.
So had we not diversified him, I'm just thinking about how much the NASDAQ lost in 2022.
Right.
That was
Yes.
over 30%.
Yes.
So, yeah, I mean, diversification, and it's more than just stocks, right? You have to have every tool in the toolbox that's available.
Well, there's
to
all
you.
the other sectors as well that maybe are non-correlated to the
There you
market.
go.
Gold, right? So in traditional history, when stock market goes down, gold goes up. There's all the other commodities, oil and other things. So it's a flashy word to say I'm diversified my portfolio, but are you truly diversified in your portfolio?
Exactly, exactly. Well, Adam, overall, how important is it to have a plan before the storm hits versus trying to make sense of it during the chaos?
Oh, I mean, come on. A plan is absolutely critical out there for everybody that is looking to really ride anything that comes out. You know, if, as you said, if you can get this in place before the storm, we're already looking at how do we handle down markets? How do we handle up markets? What are we doing in terms of producing paychecks versus playchecks, which I know we're going to get to later.
Right.
But it is important to have something in writing, and having that in writing and not be written in stone either, right? It has to be able to move with your
roadmap.
life.
Yeah, and I think that also back to diversification, the trend of buying what's hot, you know.
Yes.
So everyone is buying AI right now, right? I mean, one of the most overbought sectors. I mean, everywhere you look, every financial channel you turn on, AI this, AI that.
I'm AI.
And it's great. And Adam's not even here. This is AI. This is really not him. Can I touch you? and so we look at, yeah, you want to be diversified, but you don't want your emotions to cloud your path of diversification, if that makes sense.
Fear and greed. That's what Warren Buffett says.
That's right.
Yeah, that's right.
So, Jordan, talk a little bit about the RIPT report that people are having the opportunity to call in for today.
Yeah, it goes right along with what we're talking about. So everyone watching can call in and spend 2 meetings out of their life to get their own customized RIPT report, RIPT. The first section stands for risk. Make sure that you're driving as fast or as slow as you want, and your portfolio is following those guidelines. The I is an income plan. Do you have an income plan or income guess? What if you screw up and live too long? How much income can you generate? We'll show you. The P is portfolio. That's what we just talked about in this segment. Make sure that you have a healthy portfolio. Your sectors are right. Your fees are low.
You're diversified.
You're diversified, right. And then the T, we also hit on that a little bit in this segment, is taxation. Now is a great time to consider Roth conversions. We have a tool that can show you how to do that.
Taxes are on sale, too.
Taxes are on sale. That's right.
Jordan, thank you. Adam, thank you so much. To our viewers at home, the number to call to get ripped is 888-462-7839. 888-462-7839. You're, of course, not calling in for this guidebook, if you will, but you are calling in to schedule your complimentary consultation. We know that you have a lot of questions about how to weather the storm in a volatile market. What you really need are the consultations that are being offered to you complimentary, free of charge. That number again, 888-462-7839. Probably the most important tidbit of information we gave you today is to go ahead and visit maintaxbill.com. Take a look at where you currently are with your tax implication. Should you make some changes now? Is a Roth conversion right for you? You won't know until you take the challenge, maintaxbill.com. We'll be right back momentarily. I have so much more with Jordan and Adam. Stay tuned.
Think your retirement savings are all yours? Think again. Your 401k, IRA, or pension comes with a tax bill from Uncle Sam, and it could be bigger than what you expect. Want to find out how much? Our quick and easy tax calculator can show you right now. Plus, see if a Roth IRA conversion might help lower your future tax burden. Just scan the QR code or visit maintaxbill.com.
Welcome back to the Main Money Show, where Wall Street meets Main Street. My name is Cynthia DeFazio, joined today by Jordan Main, president of Main Financial Group, as well as Adam Freund, CRC of Main Financial Group. We're talking all about market volatility and how you can weather the storm. Well, gentlemen, obviously people are probably leaning in right now saying, what else can I do? What else is out there? And something that you love to talk about, annuities. How are annuities a good fit right now when people are nervous?
Well, I think it's interesting because during this period of time when we look at April, we didn't get calls from people that already had fixed indexed annuities in place. They knew that their base was solid. They had a good foundation to their retirement. What we got calls were from people that wanted to know, should they put more into the market because the things were down. We've actually trained and treated them, educated them well in that respect.
And that's what you talked about earlier in the show about generating paychecks versus playchecks. So the paychecks are things that are all guaranteed income, so Social Securities and pensions and some of these income annuities, so that when the market does turn down, it doesn't impact your guaranteed base. The playchecks are dollars that you can take out of these securities accounts. They go up and down, and when they're down, you don't need to touch those. So that's to Adam's point. People are calling in because, hey, maybe we should buy more into the securities world because we know we already have our income set. And that's what a good written plan does.
Okay.
I would also say that for those of you out there in our Metro Detroit area, if you have, let's say, an annuity that might be, 2, 3, 4 years old, you should have, we call it refinancing, refi your annuity.
Interest rates have changed so much over the last 5 years.
And the products have gotten even better.
Yeah.
So there's a lot more. They've made a power drill into a super power drill.
Yeah. Well, and I think, like they said, I don't mean to interrupt you, but are annuities good? Are annuities bad? And the answer is yes. There's so many different types.
Exactly.
And I know we've talked about this in previous shows, but ultimately there are really 4 big categories of annuities. The original one, they just called an immediate annuity. And that's when you traded your money for a stream of income. And if you died the next day, the money was gone. But if you screwed up and lived too long, it would stay forever. Then the next annuity was what's called just a fixed annuity, which used the analogy of CD. CDs. Just a term and a rate, no income for life. Both of those are annuities, but 2 totally different chassis. Then when the creation of the mutual funds got hot in the 70s and 80s, the variable annuity came. And that is simply an annuity that's filled to mutual funds. So the dollars pass through the insurance company and go to the mutual funds. So the insurance company needs to charge fees. So a lot of fees and risks. We don't even offer variable annuities in our firm, won't do it.
Okay.
And the most exciting one that we're talking about now is what's called the fixed indexed annuity. And I use the analogy, this lets you dip your toe in the water without taking all the risks. So a fixed index annuity, you make money when the index or markets go up, but when the markets go down, you just get nothing. You zero, you don't lose anything.
Okay.
So you can participate on the upside, not on the downside. And I think that's so important when times are volatile. People just want to put all their money under the mattress, right?
That's true.
Or they want to tie it up in a long-term CD or a bond and just get completely conservative. The fixed indexed annuity allows you to be conservative, but still grow your money because we have to keep up with inflation, and that's growth.
Yep.
Most definitely. And if people are unsure right now, they think they're doing okay, but they're not really 100%. What about getting a second opinion? Do you recommend a second opinion?
Absolutely not. No, of course we do.
Stay the course.
What do
Get
they
a
say?
second-
You can't get a second
First-
opinion from the person
first-
that gave you the first
right,
opinion.
exactly.
Yes.
I always get that mixed up. But yeah, a second opinion. If you got diagnosed with something, wouldn't you get a second opinion from a doctor? Of course you would.
Right.
So,
and I think that goes to
second
all the
doctor.
people that are out there that have advisors, or we had one show, remember, months ago on the DIY, the people
DIYers.
doing it themselves.
Yeah.
So
Yeah.
for people that are investing in their own portfolio or have other advisors, it's worth a second look. We don't charge for our RIP report, which is an evaluation. Take us up on that offer. It's a great tool.
I love that. Well, on that note, let's talk a little bit more, Jordan, about what people can expect to receive when they call in to schedule that consultation and have their RIPT report done.
The RIP report, absolutely. So you call in or text in or hit the QR code. And a reminder, we now have 4 offices in Metro
that.
Detroit. Yay!
Yay.
Troy, Bloomfield Hills, Livonia, Northville, and now Brighton. So we're going to put together your own customized RIP report, which the R stands for risk. How fast are you driving? But is your portfolio lined up with that? Or how slow are you driving? The I is income. We talked a lot about that. Do you have a guaranteed income plan, or is it more of an income guess? And most excitingly is we can tell you what is the maximum amount of income you can get out of your portfolio without ever running out. The P stands for the health of the portfolio. We also talked about that in this show. Make sure that you are in the right sectors, you have the right diversification, and you have a low fee structure. And lastly, we have Uncle Sam, the tax side of it. We talked about that great tax calculator, the tool that is free for anyone that wants to try it. So we're excited about the RIP report. We'd love to see you in the office.
Jordan, thank you so much. Adam, thank you so much. To our viewers at home, the number to call, 888-462-7839. This is your opportunity to get ripped. And if you're looking for a second opinion to make sure that you're okay, take advantage of this today. Thank you for spending time with us on the Main Money Show, where Wall Street meets Main Street. We look forward to seeing you back 1 week from today. Be safe, be happy, and be blessed.